You're listening to Macro Sunday, hosted by Andreas Steno. Happy Sunday, everyone, and welcome to the Macro Sunday podcast. I'm Andreas Steno, founder of Steno Research, and with me, as per usual, I have you, Emil Møller.
Yeah, reporting for duty.
Yes, our head of research, my true lieutenant,
Yep.
and a lot of other...
unmentionable things.
Yes. Emil, I think the dollar has been in the limelight this week from a macro perspective. We've had plenty of discussions with sparring partners on whether the tide has turned on the US dollar. So we'll spend some time on discussing that topic today. Mm-hmm. We'll also elaborate on the higher for longer narrative in interest rates and the impact of higher structural interest rates for the green transition. And in light of that discussion on the green transition, we're joined by Suriya Jayanti in like 15 minutes from now to discuss what's going on in offshore wind, solar energy, and nuclear, especially in Europe. Suriya is the former energy chief of the energy unit in Ukraine. An American, but worked at the embassy in Kiev before the invasion. So very much in the know around energy politics, the ramifications of the conflict in Ukraine, and now the ongoing malaise in the offshore wind industry. We obviously also track that, given that we basically sent to you live from what we consider the capital of offshore wind worldwide, namely Copenhagen, right?
Yeah, absolutely. Yeah, we can scarcely avoid it.
It's a pretty big thing in our budget, so not ours, but the Danish budget, that is. But before we get to the discussion on interest rates, the ramifications for the green transition, also the ramifications for different types of energy in the energy transition, I'd like to start with a discussion on the dollar, Emil. We entered a short euro-dollar position. Was it on Wednesday?
Something like that. Yeah. I've already forgot.
So far, so good. But Emil, what do you make of the dollar here? It's been one-way traffic, more or less, since that soft inflation print from the US a few weeks back.
Yeah. So it's an interesting situation, because if we look at it from summer, you had an unbelievable dollar strength streak, essentially, like multiple weeks just record-breaking. And then the first whiff of soft inflation in November, and everything just collapses, basically. I mean, you could basically bought anything against the dollar in November and you would have made money, right? I think it's a bit of an overreaction, but perhaps understandable given the lead up.
Yeah, positioning was probably crowded, right?
Exactly. And I think we're probably approaching a pivot, and we will see some essential dollar strength from here, hence why we're long. But what I will say is, what is interesting is, at least in my view, that a large part of the dollar strength has been due to the market underestimating the pressure on US treasuries, and that's starting to approach some resistance at this point. But I think if we see the 10-year and the long end going a bit below, say, if we approach, there's a 400 bips point, that sort of thing, then I think I don't think risk assets will hold up anymore. That's sort of my gut feeling at this point. So I'm really watching the long end and risks here when assessing the dollar in relative terms to other FX. So that's my line of thought right now. So a brief momentum of strength before the reckoning.
That's day of reckoning.
Yeah.
You sound like Jehovah's Witnesses or whatever
they're called. Yeah. Sound like a proper dollar bear tinfoil hat here.
Emil, what I find interesting as well in relation to this discussion on the dollar right now is that we obviously need to track everything in relative terms geographically when we talk about the dollar, because the dollar against what, basically.
Yeah.
And when we look at news out of Europe and China over the past week, I'd say they are on the margin pretty positive.
Yeah.
I mean, from a sequential perspective, not as bad as the news were in October.
Fair enough. Yeah.
The question is just whether can the US deliver even better sequential news than Europe, China, etc. And we have a very strong conviction in a seasonality narrative into year-end in US key figures. Not least due to the so-called statistical wizardry of the Institute of Supply Management, the Bureau of Labor Statistics, etc. When we run our models for the ISM numbers for November, released early December, it looks likely that we will get a positive surprise. And maybe that is what's needed to take the dollar sort of back in the driver's seat of FX markets short term.
Yeah. I think my point of view here, Andreas, is that it's quite binary because we are in cycle dynamics. So either our models are spot on, so to speak, and or we are essentially calculating revision bias into a prediction. That's not my main case yet, but I think it will come. So it's something you should keep aware of when assessing positioning at this point. That's sort of my general.
I feared you were about to say that euro dollar is a binary.
No,
trade. I was about to say, am I paying you to say that?
Finance, Michael Owen here.
But I agree with you that what we're currently stuck with is a year-end seasonality bet, essentially, very spreadsheet driven. So is it actually a rebound? You could argue that it's not. And by the way, the spreadsheet seasonality, it will reverse big time into January, February next year, making January and February look, well, extremely bad. Especially if we're right that the fundamental trend is negative. Meanwhile, right? So I still think that your good old recession call for January, February is pretty much spot on. At least that is probably the timing where it will be evident.
Well, what I will say is by the time that I made it, I was ridiculed, right? They're not laughing now.
Not to the same extent,
no.
But I mean,
but it's not the base case for markets at this point.
No, it's not.
So.
I mean, was it this week or last week? We received this monthly survey from Bank of America, where they basically ask questions to fund managers, and they sneaked in a question on like 2024 base case trades versus 2024 tail case bets, basically. And it's interesting that the consensus for next year is very uniform when it comes to inflation, when it comes to bonds as well. I mean, I don't think anyone in that survey basically dared to say that they bet on high inflation next year. So, I mean, if you're willing to take that side of the bet, you probably have some pretty decent risk reward. I'm not saying that it's a high probability scenario, but no one dares to bet on it, at least.
No. But it makes some room for very convex, concise positioning in exposure to those risk scenarios, I would argue, right? I mean, if you look at what the market really anticipates, it's actually quite boring, I would argue. And
shallow soft landing, pretty decent performance in equities. Slightly weaker dollar. Weak European performance, weak Chinese performance versus the US. I mean, it's basically just an extrapolation of what we've just seen. Nothing else than that.
Does it remind you of anything in particular? Like any pivotal point in recent history where you think this is probably a decent analogy? If not, I can offer mine. All right. Well, the lead up to the great financial crisis, right?
Yeah, sure.
You know, unbothered, unaware, sleep at the wheel, market pricing just vanilla. Meanwhile, we can see all the underlying signs of enhanced recession risk, and that's sort of that's the flashing light in my eyes at this point. So, yeah, that's how I look at it.
I wouldn't rule out that it is a, if not perfect analogy, then at least an analogy that works. also given that, I mean, I've heard so many times this year, the European Central Bank can stay at high levels for longer than the Fed. They will not dare to move ahead of the Fed. The same analogy is used on the Bank of England. And if you look at it from a financial conditions perspective, conditions are so much tighter in Europe. And I mean, by miles tighter than in the US, simply due to variations in the duration profile of household and corporate debt. I mean, anecdotal evidence, but and we even, Emil, live in the only country in Europe that is kind of similar to the US when it comes to household financing.
Yeah, sure.
At least to a large extent, we have 30-year fixed as well. While that is not something you see on the shelf anywhere else.
No.
If we drive across the bridge to Sweden, you basically, the standard product is basically more or less the central bank policy rate.
Yeah, you get the fund.
Lag 3 months, something like that, right? So, I mean, when you hike interest rates in Europe, at least in this cycle, it just filters through the system much faster. So maybe that is a clue to the Americans listening here that everything we see in Europe right now, it will arrive in a city near you, just with a time lag.
Yeah, but I think the ratio in between the fixed versus variable rates when it comes to private industry debts in Europe and US, I think it's something equivalent to 70 to 75% in US that is fixed, and it's the exact opposite in Europe. So it's no wonder that monetary transition should be at least faster in Europe. But I think for now, what we really need to see in Europe is material signs of deterioration within the labor market. That has to come. I think we are on the doorstep for further austerity measures, even though no politicians like to admit so. And I was quite vocal about this in the summer, right? I think we will see another round of the whole euro sovereign crisis, political dynamics once that really kicks in. And you can see how Scholz, he's currently balancing between domestic agendas versus, allowing the Italians to basically do whatever they want and what have you. I think that whole bonfire is about to ignite. So,
but if we look at the sort of live assessment of the euro area, also given the PMIs out last week, I mean, it still looks like a very shallow recession in Europe. For now.
Sure.
We're not growing. That's safe to say, but
we never did.
But it's still like it's a contained downside for now. More like a long bumpy road leading to nowhere. That's essentially the feeling around Europe right now. But no major recession either. Let's see. I mean, we probably need a US recession to get that European recession towards. At sort of a less shallow profile. But let's see. What I'm trying to say here when I remind the American audience of the lagged effects of monetary policy is that I'm not necessarily sure that it's a good idea to bet on US exceptionalism for 2024. It's a major consensus out there. No one dares to say that it may make sense to be invested outside of the US for next year. I don't think that's a bad idea. Despite all of this, because we're back, if you ask the consensus once again, we're back in the scenario where everyone is like, I can't see anything positive outside of the US. And that's the exact same answer you get no matter where you look.
Yeah. Well, I agree. I agree completely. I mean, even though I'm a recessionist here, I'm not really. It's not the end of the world I'm forecasting here, but I think we will see a mild to an ordinary recession, basically, and I think rates will start to behave in its usual recession manner, right? But there is a chance, but it's small. But if the central bank starts to wake up and actually look forward instead of just be reactive, that they could perhaps prevent some of the weakness in store from the lagged monetary tightening effects. But I just don't see it happening. I mean, they basically just conceded to being blind passengers in the train, right? Perhaps we should just withdraw their salaries or something, since they just let the markets do their bidding. And so, So yeah, that's how I look at it. We're poised for a car crash, but hopefully there's some insurance when that happens.
I still think that the Federal Reserve will hike in December. People call me crazy, but
Yeah.
let's see. Speaking of rates,
Yeah.
and the Federal Reserve, the notion of higher for longer lasted at least a couple of quarters, maybe. But I'm not really sure that anyone buys it anymore. But I think you get the same response everywhere again here. Oh, structural rates are slightly higher than they were before 2020, but they will come down.
Yeah.
Maybe so. My point here is that we're slowly but surely approaching the time where we invite Suriya Jayanti to the podcast. And she's obviously an energy expert, very much involved in planning around nuclear, solar, and wind farms in Europe. So I'd like your take, Emil, before we invite her to the Macro Sunday podcast here. Sure. Seen from your perspective, and we have quite a few of the wind turbine giants here, based here in Copenhagen, or at least in Denmark. Yeah. What's been the issue for the offshore wind industry this year?
Oh, a number of factors. First of all, I think they were completely unprepared I think basically it just suffers from being a bad duration bet in a sense, and they haven't really been risk managing at particularly impressive levels. I think we can see that in some of the domestic players. And then, of course, the other handle to that whole equation is fiscal outlook. A lot of postponing of different projects and what have you, and also that needs to be mentioned. I'm sure that would be enlightened a bit on that in the interview, but the emergence of alternative technologies, that's probably the third wheel to the carriage.
Yeah, it is. And Emil, it is time to introduce not Suriya Jayanti, but Donald Trump. Sorry, to the Macro Sunday podcast. I did a podcast that was called the Macro Trading Floor before. So, Emil, we have a soundbite with Donald every single week.
I thought you did a podcast with him. That's one. If only.
And Donald has been very vocal on wind turbines lately. So here's a soundbite from a press conference of Donald Trump around his views on wind turbines.
We'll have an economy based on wind. I never understood wind. I know windmills very much. I've studied it better than anybody. I know it's very expensive. They're made in China and Germany mostly. Very few made here, almost none. But they're manufactured tremendous, if you're into this, tremendous fumes, gases are spewing into the atmosphere. We have a world, right? So the world is tiny compared to the universe. So tremendous amount of fumes and everything. You talk about the carbon footprint. Fumes are spewing into the air, right? Spewing. Whether it's in China, Germany, it's going into the air. It's our air, their air, everything, right? So they make these things, and then they put them up. And if you own a house within vision of some of these monsters, your house is worth 50% of the price. They're noisy. They kill the birds. You want to see a bird graveyard? You just go. Take a look. A bird graveyard? Go under a windmill someday. You'll see more birds than you've ever seen ever in your life. In California, they were killing
I think it's safe to say that he's not a fan.
Could scarcely move to work here without stepping on dead birds on my way from the countryside.
I mean, of course they kill birds to a certain extent, but I mean, we have quite a few windmills here. It's tricky to find any birds below them, to be honest.
Yeah. Apparently not that daft.
No. But anyway, Emil, with Donald's take on windmills, I think it's a good timing to invite an actual expert, even though no one has studied windmills to a larger extent than Donald, apparently.
Got it all figured out.
So Suriya Jayanti is the former chief of the energy unit at the U.S. Embassy in Kiev, Ukraine. A cliffhanger. She's not a favorite of or fan of windmills either.
I thought you meant Donald Trump.
No, I don't think she's a fan of him. No. I haven't asked her, but we could ask that question. But my point here is that Suriya, working very intensively with these technologies, will probably make the case for nuclear. So let's invite Suriya Jayanti to the Macro Sunday podcast. And as per usual, we introduce our guest of the week with a piece of music. And since Suriya had boots on the ground in Ukraine until a few years ago, I think it's a good timing to play the national anthem of Ukraine here in the podcast for the first and probably final time.
No,
Yeah.
good.
So here it is. It's now our great pleasure to introduce Suriya Jayanti to the Macro Sunday podcast. Great to see you, Suriya. Thanks for joining us.
It's a pleasure, and thank you for inviting me.
Suriya is the co-founder and managing director of Eney LCC, a clean tech company, and also the former energy unit chief at the U.S. Embassy in Ukraine. Suriya, we are recording from Copenhagen, and at least us Danes, we like to see ourselves as the world champions of wind turbines in many ways. But it's been a rough year, not least when looking at the equity returns in some of the big names within the offshore wind industry, headquartered out of Denmark. So if we start with a discussion on the prospects for the wind energy industry, what are your takeaways from this very rough season that we've been through?
Well, I think what the energy crisis that Russia manufactured in 2020 and 2021 taught us is that we all need a diversified energy mix in order to be resilient from both supply and demand side spikes and crises. And what came after, I think, was a little bit of hysteria coupled with a little bit of euphoria as Europe managed to almost shrug off its dependence on Russian gas in favor of other sources of both fuels and electricity. What developed was this euphoric overconfidence, I think, in renewables. And while renewables play an extremely important role in any stable, diversified power mix, they are inherently unreliable. What we would say in the industry is they're not dispatchable, meaning you can't turn them on and off whenever you feel like it. There are ways of handling that. You can have battery storage facilities, et cetera, to help. But basically, at a certain point of renewables, things become a bit unstable. And there was a great deal of movement quickly into renewables during and following the energy crisis. And the fact of the matter is that I think in any industry, when everybody suddenly starts buying the widget, because it happens to be the most trendy widget that's available at the moment, obviously there's then going to be some market instability and some price fluctuations, and that's really what we're seeing. We're basically just seeing an industry sector in which it's become very difficult to predict prices, which makes it hard to put business plans together. But on top of it, it also, when you have that sudden influx of huge investment, it bottoms out the earnings prospects. And so we're seeing a lot of companies pull back.
If we look at the role of China in all of this, we've heard from the European Commission lately that they are concerned with China's impact on the supply chain of both solar and wind energy. Is China behind some of the weakness in the trends that we see in wind in particular, but also solar?
Absolutely.
Mm.
The role of China in the energy transition as a market force and a supply chain powerhouse cannot be overstated. So to start with, almost all solar panels and wind turbines are still manufactured in China. And then if you go a step back, those turbines and panels also require commodity inputs, for example, rare minerals like cobalt or zinc or nickel. Some of those are less rare than others, obviously. And China has a monopoly on most of those mineral resources because it was thinking quite long term about this decade ago and secured the sources when the rest of us hadn't quite worked out how scarce they were and how much we would need them for the energy transition. So China is in a position to fully control, not fully, but mostly control the supply chains for both wind and solar. It's beginning to change. We're beginning to see some manufacturing pop up in other places. But suffice it to say that at this point, China is in the driver's seat on a lot of this. And if you look at some of the geopolitical games that are getting played, trade wars between the United States and China, for example, China has begun to flex that muscle. So we had supply disruptions during the COVID lockdown because China's economy completely shut. And that's one of the reasons why energy prices spiked so much and inflation spiked so much pretty much all over the world. But now that China's open, China is flexing that muscle as a geopolitical instrument, mainly to cause pain on Western governments and especially the United States in retaliation for what China views as anti-China measures taken by those countries, and again, especially the United States. So, absolutely, China is hugely important, and until the West develops its own secure mineral supply chains and its own wind turbine and solar panel manufacturing facilities at scale, this is going to continue to be a problem.
So where does it leave us in Europe first and foremost? We'll get back to the US in a second. I know you've been traveling Europe a couple of times lately, Suriya. You're also in Europe now, as far as I'm concerned. So where's where are we headed from an energy mix perspective in Europe for the years ahead? Has the needle moved in favor of other energy sources?
Well, I think again, much like a secure investment portfolio, it's important to be diversified. And what the energy crisis taught us is that Germany, in particular, but not just Germany, also Austria and a couple other places, over reliance on Russian pipeline gas left it incredibly vulnerable. So I should be quite clear that renewables are playing an extremely important role everywhere in Europe and that should continue. But because renewables are not dispatchable power sources, there's going to have to be a base load in order to make sure that there is guaranteed power generation. And for countries and indeed municipalities or states in which heating is still done by fossil fuels, there needs to be a source of that. So Europe has done a very good job of switching where it is getting its fossil fuels from Russia to other sources. That's not absolute. Europe is importing a lot more Russian LNG, for example, than it used to, and markets are still flooded with cheap Russian Urals crude, a lot of which is going into Europe, in some case disguised, in some cases blended in with other crude. And in some cases directly if it falls under the agreed upon price cap for that crude. But a lot of Europe's fuel sources are now elsewhere, US LNG, for example, or gas from Azerbaijan or Qatar. So that's going quite well, although it is still much more expensive than it was before the energy crisis. And so long term, Europe is going to have to deal with the costs of LNG versus very cheap Russian pipeline gas. But in the meantime, I think if we're looking at the power sector, electrification is the only reasonable way to achieve the energy transition. And the energy transition is important for energy security and energy independence before we even get to the discussion of climate change, right? Which is obviously the main driver, but in the short term, energy security and independence are far more critical. And you can't do that without electrification because if you're reliant on imports of fuel, then you are inherently vulnerable. So, what Europe can do now is build battery storage facilities, grid scale, so that it can better use the wind and solar and other non dispatchable sources that it has. Those are quite fast to build. You can get them up and running in under a year, and they provide grid balancing services and basically provide a way for solar and wind power to be stored when there's too much of it and then released when the wind dies or the sun's not shining. So that's an extremely valuable technology. But then also, there are short term fuel options like biofuels that could be invested in that would help curb some of the need for example, US LNG or Russian LNG. But the most promising long term supply is nuclear. And that's because, as a practical matter, although it is cost heavy to build, in the long run, over the 60 to 80-year lifespan of a nuclear power plant, the costs are much lower than the real costs of wind or solar or other forms of energy. And Europe is taking good steps towards becoming, either for new countries, first-time nuclear countries, and for countries like France that have robust nuclear industries, even more robust nuclear countries rather. And the problem with this is that it's extremely expensive at this point. Countries are struggling with how to finance large scale nuclear projects. Nobody has yet worked out how to allocate the risk of these projects such that the private sector can get properly involved. It should be some kind of public private partnership in some countries. There should be the possibility of purely private nuclear development, but nuclear is so heavily regulated that it becomes quite difficult to manage those processes, and nobody's done it yet. Uh, and then there's the nuclear supply chain problems, which is that Russia is still a critical nuclear industry country. Not only is it exporting nuclear technology, for example, to Serbia or Hungary, right? But it's also got 42% of the world's enrichment capacity and 12% of the world's uranium deposits, and had been at the forefront of the nuclear industry. Its industry remains unsanctioned, mostly because the rest of the world can't afford to sanction Russia's nuclear industry, but they are beginning to find ways around it. So, Emmanuel Macron was in Uzbekistan recently, trying to talk the Uzbeks into ramping up their uranium mining to help secure France's supply chains. And as, of course, as we know, France is the most nuclear powered country on earth and is looking to be more so. Kazakhstan is very much getting into the game. Kazakhstan signed a uranium supply agreement long term with China recently, which doesn't make the West very happy, but is evidence of the fact that Kazakhstan is aware that it has the world's largest uranium deposits and is going to begin to use them. The coup in Nigeria upset quite a lot of this because Nigeria is also a big uranium country. A lot of the advanced reactor designs that are coming out are reliant on a type of fuel called HALEU, depending on how one pronounces it. And that fuel, until about a month ago, 2 months ago, was only produced in Russia. And the United States has just delivered its first HALEU shipment. So progress there, and that should allow some of the advanced reactors to begin to become viable. But it has also increased costs everywhere. And that is a reality that I think we, the West, are just going to have to learn to live with, that energy is not going to continue being incredibly cheap if we also want to fight climate change.
It sounds like, Suriya, no matter whether we talk nuclear, wind turbines, natural gas, we cannot avoid including Russia or China in the supply chain short term. So, what are the prospects of sort of diversifying supply chains across the energy mix for the West here? Are we talking decades, or is it within a sort of reasonable time frame from here?
I would love to say it's
Mm,
reasonable, but I think it's going to be longer than we wished
mm.
either way. So, for example, battery storage facilities currently require lithium because the vast majority of batteries are lithium based batteries. There are some new technologies beginning to emerge, but lithium has yet to be displaced as the most functional uh, mineral with which to make batteries. Lithium deposits have begun coming online around the world. There have been some big new discoveries, including in the United States. But to give you an example, Serbia, it turns out, has about 10% of the world's lithium deposits. A fact most people don't know because it's been kept relatively quiet while governments battle behind the scenes to keep China from getting it. And as a consequence, it just hasn't been developed because the fight that's going on among the United States and Serbia and the EU and the Chinese Serbia's been asking for, I think, quite reasonable things, which is, okay, we'd like to keep this industry in our country so that we get the benefits of it. So we don't just want to mine the lithium and then send it to Canada or send it to the United States or send it to China. We want to then process it in Serbia. We also want to have the battery factories in Serbia. We want the electric vehicle factories in Serbia. Not unreasonable, but that kind of government to government negotiation then ends up taking an extremely long time, and now add some commercial factors to that, and it just hasn't happened. And this is something that the governments in question have been working on for years at this point. I think we're going to see an awful lot of that. It's hard for Western governments to be competitive with China on these issues, because China walks into a country, let's take African country X, which has large deposits of mineral Y. We show up and say, okay, we want you to implement a full ESG enforcement and compliance system. We want to make sure that the miners aren't children. We also are going to have various processing, quality assurance parts of this. And the Chinese show up and say, okay, we'll do it for 50% of the price. We'll also build you some roads. They'll fall apart in a year, but don't worry, you won't know. Just sign here. And if you're looking for short-term cash, how do you then not take the Chinese offer? And this has been the dynamic globally for a couple of decades now, as China has walked into Ethiopia or has walked into Brazil or has walked into any number of developing or even developed countries and has offered them incredibly cheap, low quality, but immediate investment options and development options versus the West, which I think reasonably has some standards. This is playing out right now in Saudi over nuclear. The United States has been trying to talk Saudi Arabia into building nuclear power plants using US technologies for quite a while. Saudi's perspective on it is, okay, but why would I do that when you're also trying to force feed me your entire nuclear regulatory regime, which I think objectively amounts to almost an abstinence only approach to nuclear, when I could just get Chinese technology or Russian technology with no strings attached. And then I don't have to accept your entire non-proliferation scheme on top of it. And to be perfectly honest, I think the United States is going to lose this particular standoff, because why would you take all of our overly burdensome regulations just to get a nuclear technology that's not necessarily any better than what Russia's offering? And I think this is playing out everywhere, and will mean that developing secure supply chains for renewables, for nuclear, for almost anything actually, is going to take a bit longer, and we're going to have quite a few setbacks. And by we, I mean Western governments and economies.
Speaking of U.S. nuclear, at least seen from our side of the pond, Suriya, and it seemed like the U-turn around nuclear in California was a big thing from a change of trend perspective when it comes to nuclear in the U.S. We've seen U-turns in various European countries. So how would you characterize the sentiment around nuclear in the energy mix in the U.S. right now?
So the United States has a well-developed reputation at this point for being quite hostile to nuclear.
Mm.
It's not as hostile as, for example, Germany, but the United States' hangover from 3 Mile Island, which in retrospect, I think it's been quite well proven that nobody died and there really wasn't much fallout. But nonetheless, the cultural emotional response to that was very much to turn adamantly against nuclear. Fast forward 40, 50 years, and we are beginning to have to recognize the reality that there's no way to provide clean power at scale without nuclear. The US government is in a frenzy of nuclear activity. It's taking a very long time, again, because we are so slowed down by our fear based system of regulations that views nuclear as something that really must be treated like it's inherently dangerous. And when you take a no risk is allowed approach, you're not going to get anywhere because everything has some risk. But the new nuclear technologies are incredibly safe. So the small modular nuclear reactors, the advanced designs have passive safety systems. Some of them don't even have external cooling systems. They handle it all inside. So there's no possibility of a Zaporizhzhia nuclear power plant style crisis with cooling systems being cut off. Some of them recycle their own fuel. Some of them have just an amazing collection of innovations that really make them far safer than the health impacts of continuing to burn fossil fuels or the toxic waste issues with solar panels. It's of course they're not 100% safe, but nothing is. Wind turbines aren't either. They do fall over and hit things from time to time, and they do require China, and they do have minerals and chemicals involved, and birds do run into them. And all of that is true. It doesn't mean we shouldn't do them, but I'm not sure that the risk profile of nuclear isn't better than all of the other options, especially looking at it over the long term. This is a reality even the United States has begun to warm to. We're not quite there yet. In fact, Congress tasked our Nuclear Regulatory Commission a few years ago with revising its licensing procedures for advanced nuclear in order to streamline it and make everything move faster, because it shouldn't take 30 years to build a nuclear power plant. And this was to some extent looking at SMRs and to some extent looking at the next generation nuclear technology, like those that run on or rather are cooled by molten chloride, for example, or use new advanced fuels. And the Nuclear Regulatory Commission took instead of just developing new regulations specific to this new technology, it took all of its existing regulations, 600 pages, and added 600 new pages of regulations on top of it. So the final draft, and it's still a draft, it's not going to end up being what's in place, but it's going to slow us down by 5 years while we argue over it. The new draft ended up being over 1,200 pages long instead of the 600 pages that were already stopping nuclear development. And nuclear engineers looking at it ended up saying that some of the things were scientifically impossible and inherently internally contradictory, that there were mutually exclusive requirements inside this 1,200 plus page draft document. So, how the United States, despite warming to nuclear, manages to shrug off and escape our own history of fear based paranoia about nuclear, I don't know, because it would involve doing something that no bureaucracy is ever good at, which is throwing out how you've been doing it the whole time and starting completely new. And I see no evidence from my interactions with the US government that it is capable of doing that. They really do seem to be just trying to force a way through the existing system or build additional systems on top, which doesn't ever work very well. But they are in a frenzy of activity, and I hope for all of our sakes that they succeed. I'm just a bit skeptical about how long it's going to take.
The final question we have for you, Suriya, is related to the Inflation Reduction Act, an important piece of legislation for the green transition. And we've mostly covered the discussion around the Inflation Reduction Act from sort of a budgeting perspective here in the show, and the effects for interest rates and the US budget deficit. But how how likely is it that the Inflation Reduction Act will impact the energy mix of the US, say, decades ahead here?
Ooh, well, the the IRA,
Mm,
as we called it in Washington, is a great piece of legislation. It's too much too late, however. And so, just as I was saying with European wind, that there's actually been a bit of an oversaturation of investment, and the grid has yet to absorb it, and the market is not offering good enough rates of return because of the oversaturation. We're seeing a bit of that in the United States. And I have to recognize how slow to the game the United States has been, that we were the obstructing force on the energy transition for a very long time. That said, this White House has completely turned that around, and thank God it has. And the IRA is very much the vanguard of that effort. It really has revolutionized US energy markets and really has triggered a great deal and incentivized a great deal of investment into the various projects that are necessary to achieve the energy transition, whether that's buying electric vehicles or building large wind farms, etc. It's a little bit too soon to say what effect it's having on energy itself, because these projects take time, and even the fastest of them is going to take a couple of years. Luckily, it's law. And so if the presidency changes to a less climate considerate president, it's going to be quite difficult to scale back the provisions of the IRA. Things could be done, but the IRA is relatively protected. It's going to ultimately have a big effect on the United States energy mix, but we have to do some predicate work. Our grids are just not ready for the energy transition. There have been recently some famous failures in Texas. A couple of years ago, we all, at least in the United States, watched people die in Texas when the grid collapsed because it couldn't handle the spike in demand. People against renewable energy and against climate change mitigation measures managed to find ways of using that to criticize renewables, but energy experts know it was a grid failure primarily. So there needs to be a lot of predicate work to be done before we can really embrace the beneficial consequences of the IRA. So electric vehicles, for example, lots of provisions in that law that incentivize the development and purchase of electric vehicles. But we don't have the charging capacity in the United States. There aren't charging stations everywhere, and we haven't yet worked out how to balance our grids properly if the numbers increased to where we wanted them to in terms of electric vehicle ownership. So these are things that we are aware of, but it does require a level of political will and technocratic savoir-faire that is a little bit lacking on the implementation level. Even though the White House is firmly leading on this, in the States, these things are handled at the state level for the most part, or handled at even closer to home levels, the municipal, even the neighborhood level. So work to be done. I think in the long run, we will look back to the IRA as being a sea change moment for us. But it's going to take, I think, a decade before we begin to see concrete and measurable results.
Suriya Jayanti, thank you very much for being with us here at the Macro Sunday. A great pleasure to host you.
Thank you so much, and I look forward to the opportunity to chat again.
Back in the studio after the interview with Suriya Jayanti. Great update on the reasons behind the very, very weak season we've seen in offshore wind.
Yeah.
Not necessarily from a production perspective, but more from an investment perspective.
Yeah.
And quite frankly, to me, an eye-opener that, well, the needle is moving elsewhere. It's not good news for our local national budget here.
No, neither the public coffers. No, apparently.
No. We probably have to pay the bill to some extent.
Yeah.
Speaking of that, Emil, I mean, some of the big names in offshore wind, they've been absolutely battered in equity space lately, say over the past couple of quarters. Any whatsoever temptation of adding such equity risk to your portfolio right now?
Well, I always like unpopular stuff.
Yeah. Well, that's I'm a contrarian by nature, so to a certain extent, when everybody tells me that wind is not going to move us anywhere,
brilliant.
It could be a pretty decent timing to buy, right?
Yeah. Oh, yeah. That's that's usually my leg in when everybody really runs away from it.
Yeah.
But I think from a near-term outlook, I'm really worried about the austerity measures that I expect will be implemented, and I think postponing of projects are only just beginning, and I think some will be cancelled to the extent they can. But I think on a broader scale, if you really want to dip your toes in this, you should definitely follow the politics surrounding it, especially in Europe, I would say. Because once the public flows gets into the private sector again, it would be a political battle, and one front line that definitely would be fought on is green transition. So I'm not completely dismissive, but I think it might be a tad too early. That's sort of my take here.
Yeah.
And I don't like equities,
No.
generally speaking, anyway. So that's sort of where I'm at.
But I hold the view that as soon as you see, I'd say, convincing signs that the recession is actually here globally, that's your clue to buy a green tech again. Because I mean, the natural way to spend money right now is just to throw them at the green transition if you want to add to spending. I don't know whether they can add to spending in the US anymore, but at least here in Europe we can. And I think it would be a pretty natural step to take in case you actually want to open the coffers again, so to speak.
Sure. You can also, use it as a proxy trade for, long end rates.
Sure.
A tad down.
But my opinion on proxy trades. Why not trade the trade that you're actually looking at?
Absolutely.
Absolutely. Namely rates here.
Sure.
Speaking of trades, Emil, we added euro dollar shorts earlier in the week. Basically a bet on the strong seasonality in US key figures. Dates to watch out for: 1st of December, ISM manufacturing; 5th of December, ISM services; 12th of December, the CPI report. They actually get the CPI report for November just basically 24 hours before the decision, the Federal Reserve on the 13th.
That's a mad scheduling, by the way, don't you think?
Well, at least they get it. But
imagine if it's it's a massive surprise, and I'm sure they have talks in the lead up before they make the decision. It just strikes me. Why wouldn't you at least allow yourself some time to digest it? But,
I think, was it a couple of years ago, maybe 3-4 years ago, the Swedish Riksbank always held the meeting the day before the European Central Bank, and they said we couldn't decide on anything because we needed to watch the decision tomorrow. I was like, why the hell don't you plan the meeting for the day after then? For fuck's sake! I mean, anyway, Emil, we also have, I think, quite an interesting trade on the horizon here in mortgage-backed securities versus corporate credit. So when we look at, say, spreads between mortgage-backed securities and triple B credit, we're talking all-time wide spreads. It's, by the way, also kind of the same picture we see in countries with large mortgage-backed securities in Europe. I'm referring to the US in the case here. So very wide spreads due to the option-adjusted premium in the mortgage-backed space. So do you see a trade forming here in a recession? When is this trade going to work in case it from a timing perspective, I think?
So I think corporate credit is more sensitive to economic downturn surprises at this point, given that mortgage rates are as high as they are. But we should have in mind that, existing house sales is basically non-existent house sales at this point. The mortgage market, the housing market is basically just in the freezer. So, the few buyers that are left are supposedly of certain credit quality, and or at least have some equity to pay in. And if we zoom out and we look at US consumers with equity who aren't paying rents but actually have some cash hidden away, they're doing all right for now. I think basically the setup is that the risk reward is skewed towards lower mortgage bond rates and higher corporate yields.
From a spread perspective.
Yeah,
Yes.
but trend-wise, I of course think that rates generally need to come down, but it will probably not be done in an orderly manner if my recession call is on spot. So that's how I look at it. So I think it's a decent trade setup right now.
You could also argue that a part of this is due to Fed balance sheet policies.
Yeah.
Obviously, they're at least trying to offload MPS exposures.
Sure.
With limited lock from month to month due to basically a lack of restriking of the portfolio. But
brilliant they piled in the first place, don't you think?
Yeah.
Marvelous.
Again, I want to tell you about the Swedish experience here.
Oh.
Is it really a good idea that the local central bank owns corporate credit for big real estate companies? Now in trouble, by the way. I mean, take a look at the list of the 10 biggest Swedish real estate companies. They're all struggling, at least from a market's perspective.
Yeah.
And yet the Riksbank is a big holder of these bonds.
It's a car crash in slow motion. I mean, you shouldn't have to do. I mean, you can use monetary policy tools to sort of backstop the financial system if you really are heading into trouble. But to partially subsidize credit areas, I think you're treading on dangerous grounds essentially.
Yeah.
So no, bad idea.
Final comment of the week.
Yeah.
As per usual, I update you on my wobbly oil bet here. We're still in the money.
Yeah.
Whoop. I think that's. That's a pretty decent give. We've actually been tremendous in energy markets this year.
And we got hammered for entering, huh?
Yeah, we did. So just a few numbers on the oil market. The OPEC meeting this weekend was postponed until Thursday, as far as I remember.
Yeah.
For now. And I think, speaking of numbers, one of the reasons is found here. If you look at the change in the oil production since a quarter ago, Saudi Arabia, obviously with a big drawdown, even over the past quarter. The biggest drawdown was a couple of quarters ago when they decided to cut production. Russia with a drawdown still, but countries like Nigeria piling up, a country like Iran piling up, and especially the US. Just over the past quarter, we've seen an increase in the production in the US of almost 600,000 barrels a day. And net, we've seen an increase of 700,000 barrels over the past quarter. That was essentially not what the Saudis wanted here.
No.
So I think it has caught a lot of people by surprise, the sort of extent of the excess capacity in the U.S. oil sector. The production is up more than 1 million barrels a day since a year ago. So quite strikingly, even though the production is down on a worldwide basis more than 1 million over the past 3 quarters since the Saudis started tightening the market, we've seen a sharp reversal over the past quarter in the direction of higher production levels. Not from Saudi Arabia, but from everyone else with excess capacity. And I think that is why they're now trying to force the OPEC club into some sort of unity here, because they are tired of being a one-man army.
Yeah, sure. And the thing, I think it's sort of a, I think it's largely due to the post-COVID distortions that essentially just hits public coffers differently, depending on where you are. And I think some of the weakest banks here have essentially said, listen, we can't live up to these cuts. We can't maintain our credit rating. We're in trouble. So we won't comply. And meanwhile, you have others who are, like the Saudis, who they're not exactly in a good spot, but they have they have a cushion to work with, even though it's not ideal. So I think that whole discrepancy sort of challenges the entire cartel politically, and that's why you would see more barrel drumming essentially. And we've been talking about this for months, actually, and it's just increased.
So remember, it's a tactical bet on oil. It's not a structural bet.
It's not an investment. No.
Short euro dollar, considering buying mortgage-backed securities versus triple BIG, and we're long oil still. I think those are the highlights. If you want the entire story, go to stennerresearch.com. We have a 14-day free trial. You can give it a shot without even having to pay for it. Live portfolios, data hubs, 25, 30 articles a week.
And access to my email. Not to forget.
And we need to put a discount on the price now. Let's leave it at that for this week.
Get me the memes.
Yeah, exactly. As a broad disclaimer, I need to remind you that ideas discussed on this show might sometimes be...
Sometimes may be good, sometimes may be shit.
We'll end the week with Gennaro Gattuso, our good old Italian friend.
Brilliant.
I'll see you again next week, Emil.
Yeah.
Thank you very much for listening and watching out there. This was Macro Sunday, hosted by Andreas Steele.